Hello everyone, welcome to Motilal Oswal. Are you thinking about investing in mutual funds? If so, it is critical to understand their different categories. Mutual funds are the most comprehensive, simple, and adaptable way to build a diversified investing portfolio. Securities and Exchange Board of India, or SEBI in short, is the mutual fund regulatory authority which provides guidelines regarding classification of the mutual funds based on their objective, underlying assets, investment strategy, etc. We broadly classify mutual fund schemes into 5 categories. Let us now take a look at them. Number 1. Equity schemes. Equity or stock-based mutual funds are the most common type. This type of fund invests mostly in equities and equity-related instruments. There are a number of subcategories within this area. Some equity funds are categorized based on the market cap of the companies in which they invest. Example, large cap, mid cap or small cap, large and mid cap and multi-cap. Multi-cap funds invest across small, mid and large cap stocks, but with an equal measure of 25%. Flexi-cap funds, on the other hand, can invest in any stock, irrespective of the company's market cap, without being constrained by a given proportion. Others are classified according to their investment strategy: aggressive growth, income-oriented, value, and so on. Equity-linked savings scheme, ELSS, invests in the equity with a 3-year lock-in and providing tax benefits under Section 80C. The objective of an equity fund is generally to seek long-term capital appreciation. Number 2, debt schemes. A debt fund, also known as income fund, is a fund that invests primarily in bonds or other debt securities. Debt funds invest in short and long-term securities issued by government, public financial institutions, companies, treasury bills, government securities, debentures, commercial paper, certificates of deposit, and others. Debt funds have potential for income generation and capital preservation. Debt funds can be categorized based on the tenor of the securities held in the portfolio and or on the basis of the issuers of the securities or their fund management strategies. Number 3. Hybrid schemes. These are the funds which invest in multiple schemes under different asset categories in a specific proportion. Let us look at the table below. Conservative hybrid fund invests in equity and equity-related instruments between 10% to 25% and in debt instruments between 75% to 90% of the total assets. Balanced hybrid fund invests in equity and equity-related instruments between 40% to 60% and rest of the assets in debt instruments. Aggressive hybrid fund invests in equity and equity-related instruments between 65% to 80% and in debt instruments between 20% to 35% of the total assets. Dynamic asset allocation or balanced advantage fund invests in equity and debt and is managed dynamically. Other examples of hybrid fund are multi-asset allocation fund, arbitrage fund, equity savings fund, etc. Number 4. Solution-oriented schemes. Solution-oriented mutual funds promote investing for corpus preservation or capital appreciation to cover future expenses such as retirement, marriage, or kids' education, among others. These type of schemes have a lock-in period of 5 years or till objective of the fund is reached, that is till retirement age is attained or till the child becomes a major, etc. Number 5. Other schemes. Index funds, exchange traded fund schemes, that is ETFs, and fund of funds schemes, that is FOFs, are additional types of funds categorized under other schemes. An index fund or an exchange traded fund are open-ended schemes replicating or tracking a particular index. Here, the minimum investment in securities of a particular index is 95% of the total assets. FOFs also follow similar guidelines, but they operate in domestic and international markets as well. These schemes gives the investment a broader spectrum, ultimately increasing diversification. Well, now you know the mutual fund categories. Please also know that the benchmark, returns, risk profile, tax treatment, etc. change based on the category of the fund. Start investing in mutual funds and earn profits with the help of this guide. We hope you have learned something new today, as it is our constant endeavor at Motilal Oswal to educate and make an investor a sound investor. Happy investing!
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.